Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Mike Ralston, who's the CEO of Blencowe Resources, who own 100% of the Orom-Cross graphite project in Uganda. This is a huge deposit. We're looking at obviously probably about 2 to 3 billion tons with a proven high grade end product and a 21-year mining license. The project is now in definitive feasibility study stage, with first production expected in 2025. Mike is a chartered accountant with over 25 years experience successfully developing businesses worldwide, including several in Africa, which he has obviously considerable expertise in. He has been a senior executive and board member for several junior listed mining companies over the past 15 years and has raised over 300 million in debt and equity over that period. Today we're going to discuss the history of Blencowe and really, I suppose, get a good understanding of the graphite market and how the project will move into production. Mike, welcome to the podcast. How are you doing?
Thanks very much. No, great to be here, and looking forward to having a good chat about all the things you just said.
Yeah, great. So I wondered if you can just tell us a little bit about yourself, about your career, I suppose how you got into mining and how your career's developed to what it is today.
Okay, I won't waste too much of your podcast talking about me because that's the less of the important. But I'm a Zimbabwean by birth, so I was born in Africa, grew up and went to university in Cape Town, so mostly in the Southern African region. Went and worked in London for a while, and then ended up back in Africa working in Kenya in East Africa. So I know East Africa well. I worked there for 5 years. We developed a company called Africa Online, which became the biggest internet service provider during the dot-com days, the boom. And then I literally left Kenya in 2004 to make my way across to Australia. I felt with young family it was the right place to be. And arrived on these shores literally 20 years ago. And I got into the mining industry straight away through a contact of mine who gave me an opportunity as a CFO. Fortunately, that project was very successful, so you springboard from one to the next in that sense. And I've done a couple of gold mining projects. I've done quite a lot of coal. I've done a little bit of base metals, and now we're doing graphite. So yeah, my speciality, I guess, in this particular space is finding good early stage projects and finding the means to add a lot of value to them for as small amount of money as possible, because it's always the way up between putting in too much money and diluting everybody out. So, and then moving them on, selling them, or doing something with them beyond that. So it's the pre-development, pre-production phase, I guess, and yeah, I've had some successes. I've had a few that haven't worked so well. I think you probably learn as much from those as you do from the successes. But you definitely learn as you go along. I mean, I think I will say one thing, and that is, now 20 years later, I can identify projects better. I can identify the opportunities better. I can identify the means to raise that value and develop them a lot better. So you do get better at it. I think the one thing that I've maintained throughout my career is just trying to be honest and try to be open and try to make sure that people know that, because at the end of the day, you're only as good as your reputation. And reality is that you can blow that up, by not necessarily blowing up a project, because sometimes that just happens. I've seen lithium go through the roof recently, and then it's fallen away to very low prices. And so people are winning and people are losing all the time. But it's just to be honest, just to sort of call it as it is and keep trying to add value. So, yeah, that's me in a nutshell.
Great. I wonder if you can just give us an overview and a little bit of a history around Blencowe Resources.
Yeah, so Blencowe Resources was set up in 2019 to bring in the Orom-Cross project. We set up as a brand new shell company, main board listed on the London Stock Exchange. It's a great project. Orom-Cross is as you said in your earlier statement, it's a couple of billion tons estimated graphite, most of it near to the surface. So we could be drilling this and we could be mining this for 200 years. I'll be long gone by then. But the reality is what's in the ground is not necessarily the issue. What you've got to do with graphite is take it out, get your metallurgical testing done to understand what the qualities of the graphite look like when it is processed up to a concentrate, and then ultimately into the purified graphite product that goes into the batteries. So it's a brilliant project. Everything that we found in the last 4 or 5 years since we've been developing it has made us even more excited about it. I don't think we've really come across anything yet that makes us worried. And ultimately, as I'll probably say several times over the course of this podcast, you need 3 things to make a project work, and that is it needs to be a low cost to operate, and it needs to be a low capital cost to build it, and you need to have high purity of end product in order to sell it. And we're very lucky to have all 3. Very few graphite projects around the world have all 3 of those, so it is a big advantage that we have. And we've done a lot of work to date. We've completed 2 drilling programs. We've got a 25 million ton JORC resource, which we're hoping to double in the next drilling campaign soon. We've done a scoping study, then a pre-feasibility study, and now we're probably about 70 to 80% through the definitive feasibility stage. So we are moving as fast as possible. There are obviously challenges along the way, but as I said, everything to date is going to plan, and it certainly is a world-class project in terms of size and scale, in terms of product quality, in terms of everything that we've touched so far. It just has that feeling that we're onto something special.
I know you want to educate our audience around the graphite market, so I just wondered if you can explain graphite, in particularly the natural flake graphite as opposed to synthetic, splits between large and obviously small flakes, concentrate, and its most common uses.
Okay, so when we mine the graphite out of the ground and we process it to a concentrate, you end up with different micron sizes, and to put it in simplistic terms, it's called large flake or small flake products, and it's to do with the mesh sizes and what comes out of there. And the large flake products typically go into the traditional markets. That's been going on for a long time. Graphite has very high conductivity and it has high heat resistance. So these traditional markets for the large flake products tend to be in anything that has to do with heat resistance, such as flame retardants, gaskets, lining steel foundries, etc., or high conductivity. And that sells for a lot more money. So the more valuable product in these graphite projects is the large flake concentrate. But at the same time, you end up with small flake concentrate as well. And the small flake concentrate sells for a lot less. There's a lot more of it around. And at the end of the day, it sells for about, anywhere between half to a third of what the large flake concentrate sells for. Ironically, though, the large anticipated growth in the market is around the small flake product, because that's what gets further purified and ultimately put into the lithium-ion batteries as a key non-replaceable input into those batteries. So small flake is where the big anticipated demand going forward is forecast. And yes, there's the ability for the processing facilities that ultimately make the battery ready product to use either synthetic or natural flake graphite. My best understanding of this, having gone around several of these factories in China, is that some of them were set up to take in more synthetic, and some of them are set up to take more natural flake. There's nothing that necessarily says you have to do one or you have to do the other, although most of them tend to say that you get a better end product that has a mixture of about 50-50 of synthetic to natural flake. So when we talk about the growth in demand for graphite going forward, that is to go into all these batteries that will either run electric vehicles or any other renewable energy source, there is an element of, okay, where's this going to come from? Is it going to come from synthetic, or is it going to be fulfilled with synthetic, or is it going to be fulfilled with natural flake? And I think the answer is it's going to be both. So some of the forecasters are telling us that we're going to rise from about 1 million tons demand per annum at the moment for graphite concentrate to around about 3 to 4 million tons in 2030. It's a big growth, 2 to 3 or whatever that is, 3 times. And even if they're a little bit over the top and that gets scaled down to, a 2.5 million ton growth, even if that was half synthetic and half natural flake, you've got a more than doubling of demand for our product going forward. And that's a significant change over the next couple of years. So the demand is there. I absolutely believe it's there. I've been to China several times and I've seen the end users. They are telling me that they have demand, and right through to the batteries there's demand. So don't for a minute be fooled by some of the stuff you see about EV tariffs in the market. Out there in Asia and in China in particular, it's still going very fast in terms of this EV accelerated growth and ultimately the renewable transition. And that's really as much as I can say about graphite without getting too technical. But we will be producing natural flake graphite concentrate. And we also have a strategy in country, which we'll talk about later, to upgrade it to the purified product, which not many other people are doing. But it's the concentrate that's the numbers that I've been talking about are to do with concentrate.
Whilst there is obviously a traditional graphite market, which is obviously typically uses large flake concentrate, the accelerating demand worldwide is for small flake concentrate going into batteries, both alkaline and lithium ion batteries, to store renewable energy. I just wonder if you can just explain the sizes of these markets, I suppose the anticipated growth for natural flake concentrate and also the typical end users.
Yeah, so at the moment, anyone producing concentrate around the world has to get it purified in order to go into a battery. And that purification, that next stage of processing, is almost entirely done within China. So about 98% of purification happens in China, which has created a bottleneck, as you can appreciate, that has some political issues. And at the end of the day, everybody in the Western world would love to see that bottleneck of purification, broken to the extent that purification of graphite can happen in other countries and in other locations. It's not that simple. It's a highly expertise and IP intensive process. You don't just go down to a local library and get a book on how to do it. And those parties that have been purifying graphite to that 99.99% that going into the batteries, they've been doing it for 20 plus years and they're very good at what they do. So the process is, as we said before, we're going to make a concentrate, mine it at site, make a concentrate at site, and then ultimately everybody else is looking to sell product into China. But I don't think that that's the right strategy, and we'll talk about that in a minute. I think that just makes you the same as everybody else, and reality is that the buyers can squash you by doing that because they can play everyone off against each other, even if you've got high quality end product. So I think the market is definitely growing. It's growing faster in that small flake product because that's what goes into the batteries, as I mentioned before. There's a couple of million tons of growth occurring. I think a very interesting dynamic is that there's not many, if any, new graphite companies, mines going into production. And so while we're seeing this demand growth happening, we're not seeing a corresponding growth in supply. And there are a number of reasons for that. But with no supply, well, obviously that will bring some pressure to bear in terms of pricing, ultimately. But it does create a great opportunity for any wannabe graphite producer who can overcome the challenges and get into production and be one of the only few in production in a market that's growing. You can obviously appreciate what that means.
Why don't you just briefly describe the perception of the graphite supply and I suppose into this anticipated growth in demand, and why we are not seeing more graphite companies moving from DFS stage into production?
Yeah, it's a good question, Rob, and it's one that I when we came into this market 5 years ago, I looked across at our peers and many of them had been in DFS stage for 5 years, some of them for even longer, maybe up to 10 years. They keep rewashing the same old study and regenerating it every 2 years to just keep relevant. But it made me wonder what was the issue. And, in simplistic terms, as I mentioned before, you need three things in order to make a graphite mine profitable and successful. And by the way, you need a lot more than these, but these are three that are absolute necessities. You have to be a low-cost producer. There's not big margins in this game. Certainly not in the small flake graphite space at present, if you're selling a concentrate anyway. And if you haven't got if you're not one of the lowest operating cost mines worldwide, you're going to struggle to make any sort of profit. And ultimately, you're going to struggle to make your commercial success. So low operating cost is critical. Low capital cost to start the mine up, the production, is another one. If you've got a huge, big capital requirement because you're in the middle of nowhere, not near any power, roads, communication, water, all the basic infrastructure necessities to allow for a mine to work and to operate, then you're going to struggle, because raising funding in junior space is always hard. But ultimately, if you're not making big margins, you're not going to be able to repay that funds, especially the debt. So it becomes quite a tricky situation. So low capex, low opex. And then the third one, as I mentioned up front, was purity of end product. I won't go into any names or name and shame any particular mining projects, but there are some out there that, when I visited China and spoken to end users, they just say they don't want to touch their product. It's all about having the purest graphite product, because at the end of the day, that goes into the battery and it creates the optimum energy content and the optimum other characteristics required to make a high quality battery. So low quality end product is just a no-no. So I guess my view on why more projects have not gone into production is that most graphite miners out there trying to get into production today are missing one or maybe two or even three of those key criteria. And if you happen to have a high operating cost and you're not going to make any profit, you're not going to go into mining. If your capex is too high and you can't raise the money, you're not going to go into production. Or if your end product quality is just not of a suitable quality, then you're also not going to get any offtake partners to sell product into, so you're not going to go into production. And I think it's a combination of these challenges, which has really meant that very, very few new graphite mines have gone into production over the last 10 years. And I don't necessarily see that changing, because the only dynamic that changes the low capex, low opex, or in purity is prices. If prices suddenly went crazy, like we saw in the lithium space a year or two ago, then of course all of these mines could suddenly start to operate very easily. But if the prices don't move and they don't shift, then the miners themselves need to get more creative. They need to, get off their back end and go and find value-adding means and strategies by which they can make their mine more commercially successful, and ultimately then bring it into production. That's my view anyway.
Is there a genuine issue with new mines moving into production? And how's this anticipated growth in demand ahead ultimately going to be fulfilled?
Yeah, it's a very good point, because on the one hand, I visit China and I think they're up to 20% of their vehicles are now electric, and they're trying to get to 30% within the next 5 years. And their whole renewable transition and strategy is moving at 1 million miles per hour. The West seems to be a little bit slower, and there's obviously some challenges at the moment with the West in terms of going forward in the space. But I don't know. I mean, I find it very difficult to see how the battery market can continue to expand if there's no graphite coming from sources. Because at the end of the day, China supplies most of the graphite into the world markets and purifies it and ultimately into the batteries. At the moment, it's 75-80% from China, or even more. And yet China doesn't have endless supply of graphite, particularly large flake product. It doesn't have lots of that. And even in the small flake, it doesn't necessarily have the best quality end product. So the battery manufacturers are going to be looking for high quality end product from elsewhere. And I guess that's where our opportunity lies. We're very lucky that East African graphite, which is where we are, is regarded as some of the highest quality graphite in the world. So we've landed up in a situation where we have an end product quality which is, and it was very high, and we've proven this time and again with metallurgical testing in laboratories in Canada, South Africa, Australia, and China, and the United States. And then we've done bulk sample testing, and literally we've just finished a 600-ton bulk sample test program. So the end users can actually see that we can still deliver the same high quality, not just on a couple of kgs in a lab, but in something that's of that sort of commercial scale. So I think there's going to be problems in terms of supply. And I think that everybody is saying the same thing, that I think the last Benchmark Minerals Intelligence document I saw said that there need to be something like 30 to 50, maybe even more, new mines opening before 2030. And I just cannot see even a fraction of that occurring. So from where I'm sitting, it's a very tough market for us at the moment because there's not a lot of love there. The price is not very high. The market's not very supportive. But that can all change very, very quickly in this space. We've seen it with lithium over the last couple of years. And if prices start to rise and everybody suddenly falls in love with graphite, we want to be in the absolute best position to take advantage of that opportunity.
Obviously, you've alluded to a set of obviously key requirements that are essential for any new graphite mine to allow it to advance into obviously production and therefore be commercially profitable. What are these, and I suppose how can you highlight your own obviously Orom-Cross project that meets that particular criteria?
Okay, so as I said before, it's low operating costs. We are at sub $500 per ton in our PFS. I think we'll go to sub $400 per ton when we complete our definitive study. And that'll put us right at the bottom end of the scale in terms of worldwide graphite companies. So we put a big tick in terms of low operating costs. Capital costs, I'm seeing startups that require anything between $150 and $400 million to set up operations at other mines. Our latest estimate I'm talking about will be about $80 million. We're extremely lucky that we've got all infrastructure, power, roads, water, communications, etc., all there, and we don't have to go and build anything. So we are very low capital cost startup, and that is another big tick in that box. And then, as I mentioned before, the purity of the end product, all the test work we've done, be it in laboratories or in commercial scale testing, has proven that our graphite is of an extremely high quality. And it's a very, very important qualification. They call it pre-qualification, and without going through that whole process of proving right through to commercial scale testing that your product is of that quality, you just can't get offtake agreements. And I think without those, obviously, you cannot start a mine. So we have gone through that process. We've done it probably in record time. We've had very good success. We've recently announced that we've completed our pre-qualification process, and our 600-ton is done. And the big tier one OEMs are now testing our product in their facilities so they can come back to us in the near term and decide whether they want to buy our product. So we're in good shape. We've got all three of the key requirements. And I think we've got a bunch of other key advantages as well. But to me, those three that I've just mentioned are the base. Without those, you can't go forward. Everything beyond that is building more value onto that base.
Obviously, you've stressed these core requirements a few times. What is the next level of strategy and differentiation required to deliver success in a graphite project?
Yeah, so if you're selling large flake product and small flake product, typically you're about 50-50 as your end product as concentrate from any mine. Obviously, they will differ slightly, but on a 50-50 basis, roughly you break even or just above break even in terms of the small flake product if you're selling in as concentrate into Asian markets today, which means you don't have an enormous amount of profitability. It's coming from the other half, which is the large flake products. And you've got to be producing an awful big number in order to try and make the commercial success of your overall project in terms of the capital costs I've just mentioned for people to invest. So it doesn't make sense, in my opinion, at this stage to just produce and sell concentrate. You have to go into the next level or several levels beyond that if you possibly can. We've seen some of the bigger and better graphite parties. Syrah Resources have moved from being a miner into trying to become an anode producer, which is downstream. NextSource, which has got a project in Madagascar, are talking about building an anode plant in Saudi Arabia. They've all recognized that the big money in this space in graphite is made by the downstream processing guys, not us. And so what I'm getting at in terms of value add strategies to break this conundrum in terms of the projects not being successful enough, just selling concentrate, is we decided we had to go and find partners that would work with us, and they obviously have to be experienced partners that will work with us to build a downstream processing facility in Uganda. That means that we're not just producing concentrate, we're actually taking it up to that purified, it's called SPG, which stands for spheronized purified graphite. So to go up to the SPG level, 99.95. And I think by doing that, you're turning a $500 per ton product into a $2,500 per ton product. And obviously you can appreciate that's where it suddenly starts to get exciting. It's not as easy as just saying, okay, let's go and do it, because there are only a handful of these SPG companies that have that expertise and experience in the world. So you've got to find one of them. You've got to convince them to come and do it with you because they've got all the knowledge and the expertise. And then you've got to look to build the means why you can do it in your particular country, because it's highly energy intensive processing, for example. And so you have to have access to abundant, cheap power to make it work. And again, to stress, our strategy is differentiating because we've gone out and found this partner, and we've now got a strategy where we're going to build a downstream processing facility in Uganda, not too far away from our mine site, which will buy all of our small flake product. And so we're not going to be selling it at $400-500 into the market. We're going to be selling it to ourselves within this joint venture relationship, and then we're going to be upgrading it to the $2,500 SPG, and then taking obviously a share in the profitability of selling that going forward. So I think this is one key aspect of value adding, adding a strategy. And we're very lucky. Uganda has abundant, cheap hydro power, and that's a huge advantage for us and a big attraction for the partner that wants to come and build this and operate this with us, because they know that we can do it cost effectively. So we have one key strategy evolving at the moment. We announced it to the market a couple of weeks ago to put this downstream processing strategy into play. And I think the market's going to be very excited to hear that we've got a couple of other very, very exciting value add initiatives to come in the near term, which we're working on and we'll be able to announce to the market shortly, where we're adding a whole lot more value and not necessarily adding too much cost.
I just wonder if you can just tell us about Uganda as a mining jurisdiction. It's probably not known as one of the countries in Africa as a mining jurisdiction. So I just wonder if you can tell our audience a little bit about the country and what it's done so far, I suppose, in terms of mining.
Yeah, it's very interesting. Again, my background as an African. If you know anything of the geography of Africa, it's called the Great Dyke. It's the Great Rift Valley, essentially. It runs all the way down from starting somewhere in the north of Uganda, right down through Tanzania, DRC, Zambia, Zimbabwe, and ultimately ends up in South Africa. And it's probably the most mineral-rich geological area in the world. If you think about those countries, they've all got fantastic mineral wealth. I mean, DRC is spectacular wealth. South Africa in the past, obviously, with the gold and other things, etc., etc. And Uganda is part of that. Uganda has an incredible array or diversity of mineral wealth, gold, base metals, obviously graphite, and many other things. But it hasn't got a very good history of managing it, developing the mining industry, and obviously getting the value from it. and I could sort of sit here for hours and try and talk about its history and where it's gone and why that's happened. But what's probably most important now is that the government of Uganda has recognized this, and it's really working very hard to try and change it, to bring mining and resources as a big part of its economy and its strength going forward. And we're obviously the lucky recipients of that, because the government is pouring a lot of support, a lot of energy and commitment to build this mining industry. And for a Western company that's producing a battery metal, which is obviously all the rage at the moment, we've got an added kudos in that regard. So I think it's a great time for us to be in Uganda. We've certainly enjoyed our time there. We've had nothing but support from the government. We appreciate their support, and we certainly hope that we can give back. We're definitely giving back to the local communities. We've got community agreements in place, which we've already paid out some significant money, and they appreciate that, and it changes their lives, so it's a good thing. But ultimately, for all of our sake, we just have to do our job properly and bring a mine into production that's going to be successful, because there's many examples of mines that are unsuccessful and it doesn't help anybody. So Uganda's a great jurisdiction. It's stable. The government's been running, I think, under the same government since 1986, so it's definitely got the stability factor, which is good for long-term development and obviously investment. And the currency is good. The tax breaks are good. The incentives are there. And, we've been very lucky because they changed the mining law a year ago, and anyone getting a mining license now has to give away a 15% free carry. But because we got our mining license in 2019, we actually got it without that 15% given away. So we've landed up with a bit of luck. But we will continue to do what we're doing. We'll continue to keep talking to the government and all the stakeholders there, by the way, because it's not just the government. But Uganda is a great place, and I would recommend it to anybody to go and visit. And it's safe. And I would recommend people to do business there, because it's got, the ability to develop projects over the longer haul. I'm a big believer, as you can tell, and I've spent a lot of time in East Africa, so I know I've spent a lot of time in Africa as a whole, and there's only a handful of countries that I would genuinely go and develop a long-term project, and Uganda is one of them.
How do you see the market moving forward in terms of everything that you've mentioned on this podcast? And what is the role of Blencowe and obviously your graphite project in the future moving forward?
Yeah, I mean, nobody really knows where it's going to go, because I guess there's still this unknown factor of how this energy transition actually occurs. Is it going to be as fast as some people think? Is it going to be a bit slower, etc., etc.? But one thing's for certain, there is going to be a big demand for batteries. And at the moment, the preferred is a lithium-ion battery. There are obviously very many different types of batteries being tested, but all the gigafactories and the investment at the moment has gone into lithium-ion batteries, which requires a lot of graphite. Each lithium-ion battery that goes into an electric vehicle takes about 60 kilograms of graphite, and that's concentrate. So it's an enormous amount for us to mine out and process to get to that point. I think there's going to be growth in demand. I think it's going to continue to grow, perhaps not quite as fast as people thought originally. I think everyone thought that this energy transition would happen in a week. It's going to take longer, but it will grow. On the flip side, as I mentioned before, I don't see many graphite mines going into production, any new ones, because there's a lot of challenges in terms of, as I said, operating costs, capital costs, purity of product, and funding them, and the strategy that they're employing. So if very few go into production, if we're one of them, and we will be one of them, then I think there's going to be huge opportunity for us to really be in the right place at the right time. If the prices start to run high, or if some of the big players in the mining space decide they want to get involved in this particular market, and they're looking for an opportunity, and many different ways in which this can eventuate this opportunity. But we definitely see it as the right place to be. Like all things in mining, you go through phases. Sometimes everybody loves what you've got, then a year later they can hate it, and then 4 years later they love it again. It's just very cyclical, and at the end of the day, to do this job properly, you've got to have a thick skin, and you've got to be able to ride the good times and the bad times equally, and work through the bad times to make sure that you've got a company and a project that's ready when the good times come. So we're positive. We have our challenges like everyone, but I think that we've got things that most of our peers don't have. I think we've got a unique and differentiated project and strategy. And I think with both of those on board, with our experience, with our support, I think we've got the ability to really rev this up and be something special going forward.
And lastly, what's the next 6 to 12 months sort of look like for Blencowe Resources?
Well, we are intending to complete our feasibility study, our definitive study, in the next 6 months. There's going to be more drilling, where we're hoping to double our JORC resource in that time. There's going to be continued work on the ground in Uganda. We are more or less completing our work, which we call pre-qualification, in order to get offtake agreements. So we're going to start seeing MOUs and non-binding offtake agreements come into play. We're continuing to talk with funding partners. We haven't really talked about that on the podcast, but we have this very unique relationship with the Development Finance Corporation out of the United States. It's the private sector lending arm of the US government. They gave us a $5 million grant last year, and they will, we anticipate that they will assist us with very good debt funding for the project implementation going forward. We're talking to a number of other funding partners. And so all that, what I call the funding solution, is going to start coming into play, and the market will start seeing what that looks like. And then, as I alluded to earlier, we've got 3 or 4 game-changing initiatives still to be announced to the market that are in the latter stages of getting to that point where I can announce them. But I'm very excited because on top of everything else I mentioned now, they will add even more value and give us more differentiation and the ability to succeed. So we have a lot going on in various different countries. We're all over the place all the time. I've got a great team, and they're all working hard. And we want to deliver something that's pretty unique and pretty special. So we've got to keep doing what we're doing.
Mike, thank you very much for your time and coming onto the podcast, telling us about Blencowe Resources, also educating our mining community on the graphite market. And obviously there's a lot of challenges ahead within obviously the wider mining industry, but also within the graphite market, sure, which you've alluded to during this podcast. So thank you for that. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? What sort of social media platforms do you advertise and showcase your project and company on?
Yeah, we're on all of the normal social media. They can see us on I was going to say Twitter, but it's now X. You can find us anywhere. You can look up any of our announcements by looking up Blencowe Resources, or BRES, which is our ticker on the London Stock Exchange. And on all of our announcements, it's got a whole bunch of different email addresses for people to get hold of, different parties, whether they be the company itself or some of our representatives over in London doing PR, IR work. But every single announcement that we put out has all that information on it. So I'm always happy to answer questions. I get lots of emails all the time. I haven't always got the ability to answer them straight away, but I always get round to it. And I like helping people understand this graphite market better, because I think it's very there's a lack of knowledge, and it's definitely something that I'm keen to ensure that people can see exactly what it takes for a successful graphite company to emerge, and hopefully to see that our project at Orom-Cross has got all of those key characteristics. So thank you very much. It's been great chatting, and I hope I've been able to give a little bit of insight to some of the factors at play. But keep watching Blencowe Resources, because I think it's got a huge uplift in the near term.
Yes, certainly. And we will obviously include all of those links and social media channels in the show notes accompanying this. Wish you well for the remainder of the year. Perhaps you can come on next year and give us an update once the DFS has been completed, and any other announcements that you may make during the course of next year. Be happy for you to come on and educate our audience again.
Thank
and
you,
with
Rob.
obviously telling us the update with Blencowe. No worries. Thanks for listening. Hope you enjoyed that episode. If you, as always, appreciate if you can share this episode far and wide. As I always say, don't just share the episode with people within the mining industry. Also share the episode with people outside of our mining industry. We need to educate the wider global people within the world, because people outside of mining are not aware of what mining actually stands for, and especially moving the green transition. People don't understand how significant mining actually plays in that whole transition. So episodes like this will only educate the wider market and also people outside of our industry. So thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.